No,
Christian.
make the episode a big deal. The episode 50 of CyberBulls.
Oh, I love you, Alexandra. I'm
50.
telling you, there's so few people like you. I love your confidence, your competition. I love it.
I am so competitive. You're right. Okay, how about you put me on the big screen, darling?
Oh yeah, that's right. There you go. So you put me on the big screen, darling.
There I am. Here we are for another CyberBulls, and this is episode 50. And Christian wanted to make sure you all understand this is episode 50. We've done this 50 times. Not that Christian was there every time, but we've done it 50
Most
times.
of them. I've been most of them from day
You
one.
did. You did the early ones when we were not there yet, Jeff and me. That is true. Unfortunately, we don't have Xander today. Xander is getting new fridges for the frozen yogurts or something like that. But Xander is part of the team, and he was one of the early members, like Christian, with Herbert, of course. So today they let me moderate, and I'm very honored to do that for the 50th episode. And we're going to talk in 3 blocks: first Tesla, then the markets, and then some society.
The company and the product. Don't look at the quarterly stock movement.
As a trader, I got to take some off the table and wait for a better price.
A very realistic bull, questioning certain decisions.
The rational bull. We enjoy listening to bears.
Looking for the red flags. You're supposed to react.
But before we do that, we have to be all very, very happy because today was an amazing day on Twitter. First time that Twitter creators got their payouts. There were immense sums out there. I saw some 37,000, 25,000. I mean, lots of good money. So what you all think of this idea that Twitter gives money back to the creators? Is it a good sign for Twitter? Is it a good sign for Tesla? What do you all think?
I'll go real quick. So great day for Twitter. I think today was an amazing day. It came out of the blue. People, Elon's been talking about it and hinting it. But when you see it and it just dropped today without any warning, people see, I got $20,000, I got $5,000, I got $2,000. It's just incredible, right? And we think that Twitter was in a bad financial position, but if Elon's giving out money to, sharing the ad revenue to, thousands of people, that's a good sign that Twitter's in a better place, right? And, this is going to draw a lot of people from a lot of areas, right? A lot of smart people, a lot of talented people. This is going to get out, and this is going to be, I wouldn't be surprised if Elon talks about this on maybe an interview to drive people from different platforms like Facebook or Instagram to Twitter, right? Knowing they're going to get a piece of the pie. There's a lot of accounts with millions of followers that if they, did some tweeting and engage with some quality content, that they could share in the revenue. So I think it's a big deal. And this is going to be exciting to see what happens over the next few months. But I think this is the start of what Elon was promising, this new X app. And I think this is a monumental day in the history of Twitter/X. Yeah.
Love it. Herbert?
Well, I don't know. I'm very, very excited. Of course, I think of all 4 of us, only you, Alexandra, got some money, right? So
I have to pay dinner. Is that what you're saying?
So you're more excited than us. No, I mean, obviously, we, Jeff, Christian, and I, and Xander, we have a good Twitter following, but we didn't make the cut. I think the cut is you have to have at least 5 million impressions for every month for at least the last 3 months, and then you would have gotten the payout since February just to catch up, and then you'll get paid monthly. I think it's an amazing thing that Twitter's doing. This creator sharing of revenue is a big deal because the only place you can make money right now is YouTube, right? We all know that YouTube has created, a jillion YouTube creators who are making this as their job and their career. And TikTok is only selecting certain creators because they haven't figured out a model by which to do this as well. And then I think the rest, there really isn't a choice. And so paying your creators, it's going to drive more engagement. It's going to drive more higher quality, I think. It's going to probably be the 2 sides, right? The higher quality and the things that just go viral because they're dumb and they go viral. But I think you're going to get people to give it some serious thought. And then, hopefully it will be high enough that they'll be able to make it their career. I certainly am going to start upping my game. I've got ideas of the things I'm going to do, higher quality information that I'm going to share on Twitter. So I think it's a game changer. And the combination of creator revenue sharing, as well as this community notes and being the place to get real news. this is the place where you're going to get citizen journalism, right? Citizens are going to pop up out of nowhere, and they're going to start creating amazing things. Like we've got one of our friends, right, Gail Alfar. She writes this wonderful blog post. You, Alexandra, you have a Substack, and you create this wonderful research. Amy does it as well. So people like this who spent a lot of time doing a lot of research are now motivated to do more. And maybe the journalists themselves will come back because they themselves will start making more money, maybe even more than where they get it now. So it'd be curious to see how this all ends up.
Yeah, excellent points, Jeff.
This is performance based. And I think that's just the revenue sharing concept it was obviously not invented by Twitter, but just so important because it's based on the performance of the content and the quality of the content. And it's starting this flywheel for Twitter. It's efficient. I think engagement is going to explode upwards from here. And this isn't like Elon hasn't talked about this. He's said that this is what they're going to do, and now the team is following through. And I think it's going to expand, and I think it's going to really drive further engagement. So I think this is great. I think this is great for Twitter. I think it's great for getting really high quality content out there as well. So I'm looking forward to this.
It was really something very special, no doubt about it. Let's get into the topics of today. So the first one is the Tesla, the stock and the news. We're gonna hear your opinion on the earnings next week, next Wednesday. We saw quite a lot of results on competitors, so I want to hear your thoughts on those. Also, lots of talks about possible new gigalocations and mega factories. And we wanted to speak about Xander's option strategy. Now that he's not here, maybe we can't do that. Maybe Christian has an opinion on that. So yeah, let's start with Herbert, if you don't mind.
I'm going to be the bull of the CyberBulls, if I could be like that. I'm very, very optimistic. I think this Q2 is going to be higher than most are saying. I'm very happy that the earnings estimates are 18% or 18.5%. I'm happy that that's the auto gross margins is 18.5%. I'm very happy with that. I want to keep it at that level. I think at the lowest, it's going to be at 18%. But I think that there's a chance for them to surprise at the upside. Let's not tell anybody. But I just do think that the cost savings that we are seeing since January, the minerals cost, the lithium prices, as you guys are seeing, the inflation has fallen significantly. So this is a supply chain. The transportation costs have just fallen from 15,000 to back to 1,500. So I think that there's a lot of movement that Tesla's been doing continuously every month. At the last Investors Day call, they spent a big deal talking about how the complete focus of every department is cost savings. So at some point it'll show up. Now, if it doesn't show up in this quarter, then it will certainly show up in Q3 and Q4. But I'm hoping that it does, and it kickstarts us in a happy mood. So I'd like to propose a toast because let's hope for a happy Q2 earnings call, but also our 50th episode today. So
I love the jingle.
Who's not?
So, Jeff, what do you expect for the earnings?
Yeah, I think I've been saying this for a while. I think they're going to surprise on the COGS side. I'm not sure if this quarter or next. I think it's coming. The PPIs from both China and the US are meaningful. Those are deflationary at this point, and that's a big deal when you look at commodity prices and you look at again both anything that's made there or anything that's made and produced here, and it's a leading indicator to CPI as well. And I think just the cost reduction program they're on, I think they're on a steady drumbeat. But I mean, it's really I'm going to be most interested actually in the operating margin, because that's where Tesla told us they're actually focusing. They're focusing more on the operating margin side. So I'd love to see relative improvement there, even if there's some issue with gross margins. Again, I had an estimate of somewhere between, call it 15 and 18% on gross margins for this quarter. I do believe it's a trough quarter, but these PPIs coming in, the Fed has to take a look at this. I know we'll talk about it later, but they've got to take a look at this pretty seriously because you don't want this, falling into, further, call it negative territory. Right now, the rate of price increases are just slowing. But when that slows to the point where it actually starts becoming negative and it starts accelerating, that's when you can run into some real problems if that happens too quickly. So, but for Tesla earnings, I'm optimistic, and I hope the street is more focused on and how they actually guide moving forward versus just like lamenting April through June. Obviously, you're supposed to like, how is the current quarter? How are you doing versus expectations? But I really think it should really turn to this. It should be a second half story about introducing new models and really scaling up the product lines. And again, Model Y being the highest running model on the planet of any auto, I think is going to start showing its value here very soon.
I agree. And I keep in mind that tweet from Elon where I think he responded to car dealership, if I remember right, where he said it's so difficult to really understand the current economy. One day you think it's going into a recession, next day it seems all booming. So it is difficult, and guidance is going to be important. Christian, what do you think?
Yeah. So going into this earnings, I'm pretty relaxed. I think this earnings is going to be kind of difficult, right? We got a lot of moving pieces. The deliveries were great, so that the revenue number should be fine. Now we got the price cuts, regulatory credits, but we got the energy kind of moving up. So this is going to be a tough one. But I'm kind of relaxed going in because I have my position and I'm set, and my mind is, I'm just going to have what I have. And if it dips and it's a bad, I'll add to my share count. And if it's a great number, I'm invested significantly enough in the company that I'll be happy with that too. So it's one that I'm looking at, but I'm not really stressed about it. A few years back when I had monster positions, earnings would always be kind of a, one of those days that just were not good days because you're just worried about, is it going to be a bad earnings, and how is the stock going to tank because you got such a big position on. But now, my position is such where it's very meaningful, but it's not where, if it's a bad earnings and they miss that, I'll add on that and that'll be fine. So it'll be fun. I think it'll come down to Elon's commentary though. I think that the numbers will be what the numbers are. And as long as the gross margins aren't, like 1%, 2%, 3% below what the street thinks, I think, it'll be fine. But I think Elon's commentary, usually he's pretty negative. He's been negative. If he comes out and he's negative again, and he's talking about the Fed and interest rates and all these kind of things, I don't think, most investors are going to have, that's not going to excite them to buy Tesla stock. So I'm going to listen to Elon's commentary. And I think if he's upbeat and he's excited and we're going to sell every car we make and we're going to keep growing in factories, it'll be great. And if he comes out and he's downbeat, I think that, the stock might suffer. So I think that's the case.
Good point on Elon's comments. I mean, you all know that I hope he's not going, because I just would love this to be just number orientated and giving us dates and giving us, the indications. On the other hand, I hear everybody saying, we need to hear from Elon. There's always something to say. So we'll just do with it. How did you experience the numbers of competitors? Don't you all, agree that they are actually getting less and less significant? What was your impression on BYD, on Ford, on Lucid?
Yeah.
Go ahead. Yeah.
I can start. First, I just want to correct a prior statement. I used deflation and disinflation interchangeably. I mean, what we're experiencing right now is disinflation, which is on the PPI, which is basically a slowing of price increases, meaning we're not increasing at the rate we were before. So I had the definition right. I used the wrong term, I believe. So I just wanted to make sure that's clear. So on the competition side, it's very, I would say it's pretty telling globally. It's a little bit different in each region, but in general, you are seeing weakness from competitors in the U.S. and Europe, and you're seeing some relative strength in China with BYD and Li Auto. But again, we don't know their gross margins. We don't know their operating margins. In the past, they've had okay to decent gross margins, and negative to flat or 1 to 2% operating margins. So in China specifically, so we need to to see that and understand if they're a lot of people again think with scale that all these things improve, and they don't if you actually don't have a good core underlying design and manufacturing process. And Herbert and I discussed on a show last week just the highly manual nature of even BYD coming out and saying that they've got too many manual operations, which is driving up labor, and labor right now is very expensive really anywhere in the world. Labor is relatively more expensive than it's been before. So I think the key thing to watch is, are they growing operating and gross margins? Because right now they're growing units in China for sure, and China is doing a great job converting to EV. And in Europe, you are starting to see, Volkswagen came out and even they have internal executives on the record saying, "Hey, look, we may slow this EV roll. It's just not going the way we thought it should go." And with the ID4 specifically. And I think what these companies are starting to understand is that they got caught off sides with Tesla. And they got caught off sides in terms of Tesla's relative gross and operating margins even a year ago during the pandemic versus theirs. And the fact that what Tesla was able to do versus what, they're not able to really participate in a quote unquote price war without destroying their margins and really turning into a real drag on their business. So I think some of the players in Europe are starting to see that. Porsche raised their prices on the Taycan, and their deliveries, at least in North America, tanked, I think, over 30 to 40% this past quarter. So the European manufacturers are struggling on EV, and then of course Ford and GM. Their combined EV shipments in Q2 were nearly equivalent to the beat that Tesla had on their deliveries. So I think people are trying to talk down oh, that beat from Tesla wasn't the biggest thing ever. But you look at, GM and Ford basically are around 30,000 units, no real relative growth. And the other thing that's happening in North America is that EVs have double the days of inventory of their ICE business. And I think some of the media are trying to say hey, this is EVs aren't that great. Well, no, those EVs aren't that great. Tesla is in a much different position. So I think it's really starting. I think these companies have been talking through these earnings calls saying it's coming. And I mean, if I'm an analyst or I'm an investor, I'm going to really become impatient with the actual results that they're actually putting up.
Yeah, agree. And how do you feel about the more, recent competitors, Rivian, Lucid? How's your interpretation of their results?
Yeah, Lucid's in the toilet.
I'll say really, yeah. I mean, Lucid's got serious problems, and I would say Rivian. I mean, we have to see what they do on the gross margin and operating margin side. If they don't show significant improvement with volume growth, you have to start wondering. You have to double click now and actually tear down the car and say, look, is this thing too complex? Are there too many parts? Are there too many low yielding parts? Are there too many suppliers involved? What's going on here? Do they not have the right pricing, the right procurement, the right design? So, I think they had negative 83% gross margins in the prior quarter. So you want to see some relative improvement with that volume growth. With that said, you are seeing more of these on the street, and they're growing relatively well, and they also have this van business that they're shipping as well. So both of those seem to be ramping and scaling as well. But they've really got to give themselves a bridge between now and their next mid-tier product line.
Yeah, and I want to get to Christian, because Christian was giving us a hard time with Rivian stock driving up like crazy, right? Now explain us what happened.
Oh yeah, so Rivian's going, it's been going through the roof. I wasn't in it. I heard about it, so I haven't been playing Rivian. There's other stocks I've been playing that everything's just jumping off the table, and you got to buy it it's up 5% every day. Stuff like Robinhood and things like that, short-term plays, there's ridiculous amounts of money being made right now by a lot of retail traders. A lot of the stocks that have been unloved over, when you got decimated, they were down 80, 90%. These things are still nowhere near anywhere But when you're down 90% and you bounce 20, you're still nowhere. But if you catch near that bottom and now you're up 20, 30% off that bottom,
That's what's happening in
that's
the ARK funds. That's exactly what's happening in the ARK
right.
funds.
She was
Yeah.
decimated, right? You start
Yeah.
buying these things at dead, drop
Crazy.
levels, you're gonna make some money, yeah. So if you had
It's true.
capital, and yeah.
I agree. So, but you didn't go into any of the other car makers other than Tesla, right?
No,
Your position
no.
is only on Tesla.
Yeah.
Okay.
Yeah.
And Herbert,
glad
let
you
us
did.
hear
Yeah.
what you think about the competitors.
Absolutely. So I'm glad that you didn't, Christian. So here's my position, right? My thinking. First of all, last week was a very important week. A lot of people don't realize this, okay? So much information came out last week that basically proved, nail on the head, competition is not coming. I'm talking every competitor, not only the ICE cars with their inventory. We're talking about the new pure electric vehicle companies are struggling, and including BYD. So let me go through some stats here that I've covered in my past show. So number one, it was announced that there's 92,000 units that is inventory, sitting to be inventory. That's a 92-day supply. So 3 months worth of EVs are just sitting there. That's twice the industry average. Usually the dealers have 54 days worth for gasoline powered cars, but the EVs are not selling. And we're talking like Genesis, they have a 350-day supply. That's crazy. Audi Q4, Q8 e-tron. We've heard how great that car is. People love it. They have 100 days of days in inventory. And even the Kia, the EV6 and Hyundai's Ioniq 5, those things are the top cars that Sandy Munro and Corey Steuben would say is really, really good cars that are second in line to Tesla. They're up there as well. Just crazy how far they are. Now, surprisingly, the hybrids are doing a little bit better than these electric vehicle cars, a 44-day supply, even better than the ICE cars. So there seems to be this thing where when it comes to legacy auto, people who want to buy legacy, they'll stick with the gas or they'll stick with the hybrids. But that does not mean that EVs are not desired. It's just that the ones that these legacy manufacturers are making are not flying through the sales. Because when you look at the stats of the surveys, Cox Automotive did a survey, and it's still very much 51% of consumers are now considering a new or used EV, up from 38% in 2021. So it is desired. It's just not there. Ford, as we know, the Mach-E has a 98-day inventory sitting on dealer slots. And so the dealers are telling them, stop sending us more cars. And so they've hidden that. So right now you think that their sales have gone up, but when you dig into it, they've just sent it to the dealers. But now that the dealers are saying, I don't want any more, we're going to start seeing that reporting from Ford that they are struggling as well. Now, the news that came out was Lucid last week also announced their earnings, and they are way below what was expected. Their
Deliveries.
Their deliveries, was only 1,400 in second quarter, and that is well below its guidance of 10,000 for 2023. They're not going to get there. The government of Saudi Arabia, which owns 65% of Lucid, they're going to have to make a decision. That company does not look like it's going to make it because they are not making any money per car. So if you were profitable per car and you're losing money, that's fine. You just sell more. But in this case, the more they sell, the more they lose, and they're going to run out of cash soon. Faraday Future has some major issues. Their CFO, their interim CFO, had to resign. And now they're blaming him because now they're saying we need to restate our financial statements for 2022 and Q1 2023. We've uncovered real errors. So they were certainly hiding something. Now they're pointing the finger at the interim CFO. That is just a hellhole. Volkswagen Group was a major issue. The CEO held an emergency meeting with 2,000 of their managers, and he called it the final wake-up call. He's implementing immediate spending freeze, except for essential investments. And they are in very big trouble. Of course, they're going to blame it, the fact that they think that consumers are not wanting to buy EVs, when in fact, consumers are not wanting to buy their EVs. They are the ones that are struggling most compared to other EVs. They're the last. So even though we think that the ID4 is doing well, the ID3, they're not doing well at all. So, and then back to BYD. So we know that they're doing very, very well. But last week, there was a big conference in China of which Tesla participated, and the government of China got 16 car makers in China to agree to a price war halt. to a truce of the price war. And they agreed. So everybody signed it, including Tesla. 2 days later, though, they had to retract the language because of public outcry. But before they did this, they had the senior minister get up there and explain how Tesla's gross margin is 8.5 times higher than BYD's. And this was before they actually had, this was based on last year's 1.3 million of cars sold. When you get to this year's 1.8 million or 2 million cars sold by Tesla, they're going to be able to reduce that even more. And so he was basically warning that BYD only makes $1,500 US dollars per car, and Tesla makes 8 times more. And that's why he was pitching the price cut. BYD CEO came up last week and also said that we have 650,000 employees. Tesla only has 130,000 employees. And he said that his words were, I wish that we can get rid of 600,000 of them and go automation, but they didn't do that. So they are kind of stuck because they have too many employees, high cost, high salary employees, and they're not able to get into automation. So yes, they're able to produce cars, but they're going to struggle trying to even right the ship in terms of operation costs and so forth.
Herbert, you make me so happy. This proves my thesis that
Alexandra, Herbert's done his research.
right? I mean, this was the best thing. It was just wonderful. You were perfectly prepared. You made the best summary I've heard for I don't know how many weeks on the competitors. I'm so happy. I'm so happy I'm getting the moderating to this.
But do you guys agree with me? Don't you agree with me that this information came out last week?
Yeah, absolutely. Yeah.
This information came out last week, and I only investors like us are following this. But when you hear this actual stat of inventory, this actual stat of the CEOs talking, they're in trouble. All the competitors are in trouble except for Tesla. And so you've got to just keep your eyes open. When this happens, you know that the world's about to change.
And exactly. And they're trying to slow it down as much as they can. That's why they are putting good price tags on their hybrids. That's why consumers still, have a preference for hybrids, because they get them served and reserved at attractive conditions. But that brings me actually to the next point, because Tesla is going to accelerate. Tesla is not going to give them the air they need, and they will build new gigas. We're hearing lots of rumors, and they will also expand, in my view, and I got that from Jordan, the limiting factor, a lot of megafactories. He thinks it's also for logistic reasons, because carrying around these containers of megapacks, rather have them produced at multiple locations worldwide. So what do you all think? Do you all think the next gigafactory is going to be in France so that I'm going to cry for months? Or do we have better solutions? Who wants to go? Christian, Jeff, Herbert, go ahead.
I'll just go real quick. So we heard news today, India, that resurfaced again, possibly doing a car, under 25,000 car in India. So, that's exciting. Anytime, I know India is not a super rich country, but they're probably the next China, right, in the next 10 to 15, 20 years. And they have 1.5 billion people, right? So that's a lot of consumers. So even if you get, a small fraction buying your cars, it's worth it. Plus, you can do all the battery and solar stuff there. So it's a no-brainer to get into India. So if you can work out some deal that's beneficial to Tesla and it makes sense to go into India and do that, that's going to be a big win. And I think that'll be received greatly. So yeah, I think there's going to be another one probably in Europe, and we got the one in Mexico. We still have to break ground on that. So, this is like, Tesla is a long story, right? This is, some of the story's been done, right? They're up to what, almost 2 million cars. They got the energy business going, FSD's getting better and better, and it's improving every year. But the manufacturing part of Tesla is probably only 20% done. I'm just throwing a number out there. There's still a lot of factories, mega factories. We barely have any of those. We have one in California, and we have a little thing in Buffalo with solar. But there's still so much to build that hasn't even started yet. So there is so much to do. And when I think about it right now, it's kind of overwhelming. But yeah, if anyone's going to do it, it's going to be Elon and Tesla, because you need the mission. If you don't have the mission, you can't get this stuff done, because it's so daunting to think about all that has to be done and all the manpower it's going to need to build these factories. And and service all these countries. So it's exciting. So I would say, India for me, I think that announcement might be coming. I have no clue, but I would love India. And I think we're going to get one in Europe. I don't know if it's going to be France or Italy or Spain has been ruled out. So I would like to see, Italy. I'm Italian, so I would like to see a factory in Italy, and let's do one in India. That'd be exciting.
Rooting
and get the one in
for
Mexico
the
going.
Italians.
Yeah.
Love it. Jeff, what do you say?
Yeah, I think the overarching theme is to localize supply. Cars are a couple of tons each. Mega packs are many times that, and these are things you want to localize supply to the you want to localize the source to the endpoint as much as possible. That's going to take the cost structure down. This has been a competition or game for the last several years of how do you race the price of an EV down so where it crosses over and starts declining versus an ICE car. And I wrote a tweet this week that ICE cars are effectively the feature, the value per dollar of an ICE car is not going to get meaningfully better over time, because over time volumes are going to continue coming down on ICE cars relatively, and EVs are going to be ramping up at a significant rate every year. So from kind of a macro auto perspective, legacy's in trouble. So one of the biggest cost structures or pieces of that is, can you shrink your network, your source of supply, your assembly, and get it as close to the customer as possible. So that's what they're going to do, and that means factories in high population, also kind of high tech areas that have the ability to both consume the product as well as build the product. So yeah, all these places make sense, and by continent, and then eventually in each continent, probably several countries in each continent will follow through on factories. So India makes sense. It'll take a little bit of time to build these supply bases up, by the way. People don't realize the high-tech China supply chain took decades basically to get it where it is. Not saying that it'll take decades to build these factories. The factories can be built, but it's going to take a couple of years to get these supply chains built up and mature to the point where they're building, Tesla quality product and getting it out the door. So, but I think the key thing in all of these factory announcements is that the factories are becoming more efficient, and we've basically, a Tesla has, not an EV, but a Tesla has crossed over and is declining. The average transaction price is less for a Tesla without the IRA credit than versus its comparable ICE car.
Good. Herbert.
Well, I'm going to share another screen share here of a screenshot from Gordon Gazigi, the limiting factor, that you pointed out to me, Alexandra, that I thought was very, very important in this conversation. I don't know where the gigafactory is going to go. It's going to be one of these countries, but if you've been watching Tesla and Elon specifically, as he's been traveling the world, shaking the world in hands, this will tell you why he's been doing this specifically. It's really cool. So let me go and share this screen. Can you see this? So basically what it's saying is that this is limiting factor. He tweeted this out recently. He has a prediction that in the next 3 to 4 years, Tesla's going to announce mega pack factories for each of the 10 largest global economies. That's because mega packs are more bulky and more difficult to ship than in vehicles. The savings from shipping and logistics may outweigh the benefits of a super large gigafactory. So they're going to create these mega pack factories instead of one giant gigafactory. And it's a part of the reason why Elon was on a world tour. Here's the reason. Take a look at the top 10 economies. And we're talking US, China, Japan, Germany, UK, India, France, Italy, Canada, South Korea. Do you see anything interesting?
Yeah.
They
I think
are all
other than
places,
Japan, right? Has he been to Japan?
Yes,
Yeah.
right. He's visited every world leader in each of these countries except for Japan for now. And so you can relax, Alexandra. He's only in France because he's got to do a mega pack factory there. He maybe only have been in Italy, but I'm so sad about Spain, and because I thought Spain would have been the reason why. See, it's not one of the top 10, but I thought for sure that Spain would be would be one of the reasons why that would be where the GigaFact factory was. And then what the reason I'm saying sad is that there was rumors that came out, news that came out that said that Tesla was very upset because they leaked it. And then so then they pulled back their offer to build a Gigafactory in Spain. I don't know how true that is, but that was something that happened. And so it would have made more sense. So mega pack factories are going to be building in every one of those countries, in every continent. It's going to be everywhere. And it makes so much sense, right? To have your kind of a utility right there in your country. It's going to happen.
I agree. And I want to have a theory a little bit different for the gigafactories for the car production. I think that in Shanghai, we already know they're trying to increase now to 1.75 million cars output per year, which is a 500,000 car increase. I think we had that news yesterday. Sawyer, I think, broke that. We know that Berlin, they're going to open the second tranche as well. So that should double the production there. And obviously, Austin still has capacity, obviously, the CyberTruck being a focus there. So I do believe, we may see new gigas. Obviously, India one, I still think Indonesia may be a good place, maybe even Brazil. But I do also believe that expansion of the current sites is probably the easier and quicker way to get to certain goals than we expect. So that brings us to our second segment, which is on stocks.
Yeah.
Oh, you want to say something, Herbert? Go ahead.
Yeah. Before we move on, there's another big news that we cannot not say regarding gigafactories. And that is we heard that Giga Mexico is back on track. So about 2 weeks ago, the governor of Nuevo Leon came out and said that everything was delayed by 12 to 14 weeks. Well, a few days ago, he came back out and he publicly said that everything's back on track. All the permits have been approved. All the designs he believes has already been finalized for the Gen 2 compact car, the Gen 3 compact car. And so they're just waiting now for Tesla to decide when the groundbreaking is going to happen. And so it wasn't delayed as everybody thought, because when they initially said it was going to be done within 3 months, that was sometime to end by June. Well, we're here a couple of weeks after June. It's not much of a delay at all. So I think we're back to expecting that the compact car is going to be launched in the fourth quarter of 2024 instead of what they were saying, which is the first quarter of 2025. We are back on track, man. This is a big deal. We're going to wait for the groundbreaking announcement. I'm sure it's going to happen 6 days from now. That will probably be one of the things that will announce at the earnings call.
That's interesting. It's a very interesting take on it. Thank you very much. So good. With that good news, let's move on to the markets. Want to talk about, not this one exactly, the CPI. Was inflation finally transitory, and also the PPI that we got this morning? I want to talk about real estate prices, because real estate prices haven't come down as much as the Fed has expected. It is a lagging indicator, but there we'll have Christian who will explain all of that. The Fed predictions, you all have to remember that if the Fed doesn't move in July, Christian has to subscribe to my Twitter feed. So that's going to be a big moment in my life. Quickly going to address Berkshire at the end and talk about other stocks that all of us are holding, for those that have other stocks. So let's start with all this, and let's start with Christian, please.
Okay, so inflation, man, inflation is falling like a rock. So we're getting CPIs and PPIs. Jeff followed this stuff too. I think we're like at 3 or maybe under 3 on a year-over-year basis and some stuff. So it's real. I'm starting to worry about deflation, right? Like, you don't want inflation. We talk about disinflation, but the real worry is deflation, right? If we just keep, they keep raising rates like this, and people, eventually get tapped out, and the rates get so, extreme that the credit dries up. We've warned about that. I'm not calling for that, but yeah. So everything's looking good. I think we're good. The markets are good. Inflation's good. But we have to worry that the Fed doesn't overdo it, because the market's still signaling another hike, coming up here. 90%, I think the markets have it. So, that's all I'll say on that. I think the inflation numbers are great, and I think the Fed should really think about maybe even pausing here, because we still have the lag effects of a lot of these hikes. We had a huge hiking bonanza by the Fed, and they've done this, over the course of time here, and they've done it very fast. So I would, if the numbers keep coming like this, maybe they do another quarter because the market's giving it to them. But I think that might be the end of it. And, inflation story's over. And now we got to worry that they don't overdo it and we get into a bit of a deflation story. So, yeah, that's what I'm looking at. So the numbers are great.
So
and what was your other part, Alexandra?
Well, the other
Besides
parts was real estate. So
real
because
estate.
that is obviously the big issue that they had hoped they could, get prices lower, and that's not happening.
Yeah, we talked about this earlier, and I think not only we're not seeing decrease. I went on Zillow today again. It's going up. The price of my home's going up. Every month it's up. So I don't know about this going down stuff. I don't know what's happening in your guys' area, but real estate prices are steady to up. So I think if the Fed tries to go get after real estate, they're going to have to hike another. I don't know what it is. I think that would be the wrong way to do it, right? The Fed has to leave well alone. They've got the inflation down. If housing is going to stay elevated and it's just stagnating or it goes up 2% over the next year, 5%, let it be. Because if they go too far, I don't know what's going to happen, but we've done so much raising of interest rates. I don't think they want to mess up this soft landing that we might have right now because they want, a few more things, right? The market is the market, and the housing market will sort itself out. People that need to rent will rent. People that want to buy and they have money, they will buy and they'll put a deposit. And if they want to own the home for a long period of time, over 10, 20 years, that house will appreciate too. So, everybody wanted this 50, 40% real estate crash. That's not good for anyone anyway, because most of their net worth is tied up in their home. The average American, most of their worth is their home. And if their home deflates 30, 40, 50%, and they go look at their net worth and the equity in their home, whether they're doing a refinance, that is going to go into their brain and say, well, I'm not going to do these purchases. I'm a lot poorer because a lot of the house is their net worth. So I think the Fed needs to be real careful that they don't try to go after a single thing like housing, because I think it could do really a lot of damage.
So you do finally agree with me that the Fed is not going to do anything in July, right?
No, I still think they're going to go 25. I think they're still going to they're going to take it, but I think that should be the end.
Okay, well, we're rubbing it. I mean, can you imagine if they don't, how you will be celebrated on Twitter? Go ahead, Jeff. Take it from here.
Well, I mean, they could hike, but they could also do a very dovish hike and say, "Look, we're done here." That's the other thing. It's not necessarily cut and dry of hike or no hike. But yeah, I mean, headline came in at, I think Bloomberg reported at 2.97% for headline inflation, and the expectation was 3.1. Round up to 3.0, fine, but that was a big beat. But the PPIs again from the U.S. and China, those are the leading indicators for CPI, and those are entering, I would say, a fairly scary category. So we got to be territory, I should say. We should be mindful of that. And then you look at the jobs picture. The jobless claims came in this morning, and there were about 10% heavier than expected. And then if you look at the private payrolls last month or so for June, they were the lowest since I think December of 2020. And if you look at the curve, because the Bureau of Labor Statistics keeps changing these things, they keep going back and they keep revising prior months. And by the way, they did a revision on PPI as well. PPI for the prior month was a few tenths lower than they actually reported. I don't know if a lot of people know that, but they also do revisions on jobs. But if you look at the curve on private payrolls, it is heading, to zero. And I think the Fed is going to want to kind of pull the lever up and not let the plane, get that close to the ground as relates. They wanted to get some tightening on jobs. They wanted to get, and JOLTS is tightened. That's the number of job openings that they measure. It's another rear view metric. But if you look at the jobs picture, you look at the PPI and CPI picture, it looks like the Fed is, they should get some credit, right, for getting us maybe started late, but in terms of like this thing crashing and burning in front of us, that hasn't happened, knock on wood, yet. But if I think if they get too aggressive here with rates and get too cute, we could run into a real problem. So I'm going to be very interested to see hike or no hike in July, and what is the actual rhetoric. I think is going to be the bigger thing that wraps around that meeting. What kind of rhetoric do they put around it? Because again,
really
right now, just one thing. Up until that meeting, you've heard multiple Fed governors this week. They're going to be hawkish, pretty much. You're going to see some cracks. You're going to see some differences, but they're all going to lean because they don't want the bond markets. They want everything getting unwound in terms of the tightening that they've done. Sorry.
Yeah, and the stock market has been highly performing, so they don't feel they owe anything to anybody, right? Herbert, what's your take?
Yeah. So as always, I'm going to be the one that's a little bit more optimistic. Excuse me. So let's see. First of all, I think that the Fed's going to be very hawkish. They're going to have to, like Jeff was saying, they have to say things to try to temper things. But at the end of the day, their hands are tied. They cannot raise anymore. So yes, they might raise in July, but that will be it. In fact, I think it's going to be a pause in July, and then they're going to actually have to cut this year. Everybody was saying they weren't going to cut this year. The reason why is this AI boom is real. It's a real deal. And it's showing up in companies' earnings now. The latest earnings from major companies in this week has been very high, very good. And so this AI boom is increasing productivity of many employees out there, and it's going to show up in earnings as we go down further. So, this is we're back to a boom market. Not quite ready to, jump them down and say that that's true, but I was very optimistic in January, and this is what it turned out. And remember my rant back then when everybody was so negative, everybody was fearful. And I kind of said, when people say fear, they sound smart. But when you say something that's optimistic, they use the word, you're very, very naive. And I made that little rant. Well, here I am again saying, listen, I'm very optimistic because this AI boom thing is a real deal. It's not just affecting the Magnificent Seven. This is every company out there. And we haven't yet seen all the companies showing that they are going to have improvements in their earnings and so forth. And I think it's going to start showing up in the second half of this year, maybe the start of next year. So I think just like Jeff was saying, the inflation has been tamed, and in fact, you're looking backwards, and so you do have to worry about deflation at this point. You can't keep the rates this high. You got to cut it at some point, or at least stop saying what you're saying and bring it back to normal. So I think that we're off to the races. Let's hope.
Good to hear, and I actually agree with you. And you're always very good in preparing me for the next subject. So I just wanted to throw in that Berkshire has bought for $3.3 billion Cove Point, which is a liquid gas company. I don't think it's really significant, but it shows, because they haven't really changed much in their portfolio for a long moment, that people are repositioning, are also decreasing their cash positions. Just want to add to that we've hardly seen for at least 6 months so much inflows than we're currently seeing into the ARK funds. People always ask me why am I so hooked on the ARK funds? Well, because they're the small caps. They have suffered a lot. So the fact that there is new money flowing into these, usually from professional players and institutional players at this point, shows that people who have had high cash positions are entering the market again and entering riskier markets again. So that brings me to the point, what are other stocks you're holding? And I just want to start quickly because I wasn't that glorious. I had, as I announced a couple of weeks ago, ASTS, which is the mobile phone without the tower needs. So it's going via satellites. I entered that in the $4.80s, $4.90s. It went up to $6 when we last talked about it. Unfortunately, it's down to $4.35 again because they did a capital raise. I think it's actually a great moment to enter that stock if somebody's ever interested in that. But it didn't work out the way I wanted, so I just wanted to report on that. And we'll talk to Christian about what he has been investing other than Chipotle and what else?
No, we talked a few weeks back. I love PayPal. So everybody remember PayPal. Like PayPal during it shot up. Like it hit like 300 something. It was like a huge company, 300 billion market cap, something like that. It came all the way down, and it's still down. It hit like a low, like 59, and it was trading cheaper than it was like 5 years ago. And all the way, it's growing its revenue. Earnings are fine. Cash flows increase. Everything's doing great, right? But their growth has slowed down. So their revenue growth has slowed down. They're going to get a new CEO. So it's just unloved. And it was just sitting there lying for dead, almost like Meta was when it was down 80, 90%. We saw the Meta rally. So I've been buying PayPal. It's not a very exciting company, but payments is still a huge business, right? Everything's going online. PayPal is in everywhere. They have hundreds of millions of customers. I'm not going to bore everyone with all the things, but it's basically trading like a value stock, right? But it's pretty much still a growth stock, right? It's still growing the earnings. It's got tons of free cash flow. They're doing a huge buyback. I love those kind of stocks, right? It's like the old Buffett way, the margin of safety. You're buying PayPal. It's moved up a little bit. It's now 72. I started getting involved with it in the mid 60s. It was trading at 13 times forward earnings, right? So the earnings is probably going to be 5. If you put a 20 multiple on it, that's a $100 stock. It's still only at 70. It hit like 70 today. So it's still nowhere where I think it's going to go to 140 over the next 12 to 18 months, right? They're going to announce a new CEO. So that right now, that's my main play that I'm doing. I own a lot of other stock, but I'll just end it there since I kind of went into it. I think PayPal's great value here. And if you're looking for a trade over the next 12 to 18 months, I think PayPal is going to do really well.
Great. Thanks a lot, Christian. I'm just going to throw in anything we say here is not financial advice.
Yeah, not
just in
financial
case.
advice.
Right. Herbert, Jeff, who wants to go first?
I'll go next. Yeah. So can you guys guess? I did buy stock this week, a new stock. What do you guys think I did?
You bought Tesla.
Tesla.
I bought Tesla, dude. So I bought Tesla. Why did I buy Tesla? So first of all, this is not financial advice. Every single one of us have different approaches, and my approach changes by the year, by the decade, and so forth. So these things do change. But so I explained that when the stock was down to 100, when the stock fell below 200, I started selling my Tesla to move it from an traditional IRA to a Roth IRA. I got hit, of course, with taxes that I had to pay. So that was cash out. The stock, on Monday, I bought a significant amount of Tesla. And the reason I'm doing that is because I just learned a few things about Tesla that I think is timing wise and several things. So first of all, Dojo coming online is a big deal for me. The advancement of the Tesla bot is a massive deal. And if you watch some of my shows that I've been doing, it really shows that they are way ahead, more ahead than people think. People think I'm crazy. They think that the bot's not going to be here for many years, but everything I've learned about it feels like it's actually happening sooner than we realize. It's already something that's functional today, and they're already going to have hundreds of them soon. The other big thing is the Tesla FSD. So I just did a show this morning with John Gibbs, Dr. Know-It-All, and there was a presentation by Ashok Elaswamy, who's the director of Autopilot, and he gave a couple weeks ago, and they showed this new global general world model that they've done that is just, I'm not going to go into today, but if you watch those videos, you will see that Tesla has upped the game in terms of their ability to do FSD. So these things together tells me that, I'm not going to say it's going to happen this year. It could be a year, 2 years or not, but I'm feeling very confident that these two things that used to be, people call them option play for Tesla, right? Just the car business alone will get the stock to double and triple. But if FSD happens, if bot happens, then this stock is going to just go crazy. Well, I don't consider them option plays anymore. I actually think that they're real deal things that can happen sooner than we realize. Let's call it 2 years. I'm not going to say it's going to happen this year, but it's certainly going to happen much quicker than we all realize.
Yeah, I have. Thanks for going through that, Herbert. I have long-term positions, decade-long positions like Tesla and Google. I have similar thoughts with Herbert on it, and I won't repeat any of that. Just the layer I'll put on top of that is, in the last year, Tesla has become the most advantaged auto manufacturer in the world. They build the highest volume SKU. And I repeat this on multiple shows because it actually doesn't get discussed a lot. They think that GM and Ford, which built roughly about 1 million cars, 1 to 1.2 million in the first half of this year, and Tesla is done, basically less than that. And if you look at that, You say, well, they must have all the leverage. Well, actually, Tesla has that, and that's actually occurred over the last year. They're going to be able to lever that up in the future purchases for CyberTruck, for if there's a Project Highland, the Gen 3 product. They're going to be able to take all these bets and say, look, if you want to ride with Tesla and ride up this curve, by the way, look at the last 5 years, what we told you we're doing, and look what we're doing for the next 5. They have credibility. So I love that play. Going to continue with that play. There are stocks that I'm trading because they, the technicals. I look at the technicals and I look at what's going on in the company. I've mentioned these names over the last couple of weeks, and I'm not trading as much, but I definitely took an early position in EOS E. Does a long duration energy storage. Started that back in February in the 140 range. It's almost $4 now. It continues to do well. It's a highly volatile stock. Again, none of this is financial advice, but there's some big milestones potentially coming up with that stock, and there could be tremendous volatility. But I think, for the next 1 to 2 years, and with the government pointing so many dollars towards transitioning our grid to these solutions, I think they've got a timely solution. We just need to see them execute. And there's other plays, and again, I think batteries are my theme. I think batteries are the next oil. So I've got a number of different stocks that I'm looking at or I'm invested in. Another one is ENVX, which I think is a highly innovative design and structure for that battery that can be used in multiple form factors. Entered that one in the $10 range. It's sitting at 20, just over 20 right now, just in the last several months. So many stocks are doing very well. And then there's stocks I'm trading, like Enphase. I think it's as a decent trading range here. We got down to 155, and now it's, I think, in the 183 to 185 range. So there's stocks I'm trading. There's stocks I'm kind of holding for the medium term, and then there's the long-term plays, which I think are still, in good shape. Again, none of this is financial advice, but if you look at the markets, the NASDAQ has had one of the best, first halves in decades, and the S&P is up, I think, 17%. And there's a lot of people on the sidelines. There's a lot of dislocation that occurred, and there's people that are trying to catch up right now. So it'll be interesting to see how the second half unfolds. Again, a lot of it's going to be connected with the Fed and what they do. But I think things like the job market, and I think things like the consumer have to be watched very closely, not only here at home, but globally.
Love it. Absolutely love it, Jeff. I just want to add one thing, because I was pressed on another channel to give a 10-year outlook for Tesla, and they told me that before, so I prepared it. I actually think Tesla from here, while it's still around 275, can 40x within 10 years, which is obviously a number that sounds crazy, but I did my calculations. I mean, obviously it gets into very speculative territory there, but if what I believe comes true, I do believe that is possible. So I just wanted to join that here before we move on.
Herbert,
Whoa, you guys are really bullish.
You got to add
Don't worry.
Alexandra to the
10
Uber
years.
Bowl show.
Real quick,
On 10
so
years.
I'll up your 40x. I mentioned it last week. I didn't mention it this week. I talked about PayPal. Lemonade, that's a 50 to 100x if things work out.
There you go. It's funny because Lemonade, I was looking at the beginning, and I couldn't. I had this really not comfortable feeling with the management, and so I didn't invest. But I mean, I know there are quite a lot of people out there that are, and they were right. I was wrong. So there we are. I just hope I'm right on Tesla.
The stock's still nowhere. This was a stock, and just a real quick tap. Like, again, it's not financial advice. I something about this company, and it's not my typical sort of company. They're kind of doing different things, and they're out there a little bit with the charities and how they represent. But I've listened to the management. Something about that company just clicks with me. When I go to their app, I love how intuitive it is. It's beautiful. Everything they do is beautiful. I don't know. They're funny. They do little ads they just put out. Again, do your research. Again, none of this is financial advice, but if you think about one of the biggest markets in the world, it's insurance. Now, I know Tesla's in insurance too, but insurance is big. Home, life, auto, umbrella insurance. There's
Pets.
so much you can go. Right. And they're into pets. Yes. Right. And think about it. They're in multiple countries, right? They're so lean that they're in France. Usually big insurances, you have your French, you have your America doesn't go across the sea, right? But Lemonade is in Germany. They're in France. They're only in renters and stuff. They're in the Netherlands. And they're basically in the United States in certain things, using that AI, right? Using that data. So I don't know. Again, it's still a very small company. It got as low as $10. It's been battered. They're still away from profitability. But if they can improve and the AI gets better with the loss ratio, I looked at Cincinnati Life. This is some old line insurance company. They have a market cap of like, I don't know what it is. I might have this wrong, but it was like 10 billion to 20 billion. It's been trading in there. They had like 16 million in income. Like if Lemonade, they have like, eventually it catches on and they're able to grow like they're growing, and they eventually write like $10 billion of insurance, and they could just bring 10% of that to the bottom line. That's $1 billion of income. Put like a 30 or 40 multiple on it. That's 30 or 40 billion in market cap. It's trading just over $1 billion. You have a 30 or 40x. All they have to do is, yes, scale the business. It's a lot, but they're so tiny and they have so much to grow. So it's just an exciting. We talk about those 100 baggers, and I, if Tesla was one of them, you see these things, right? And they don't always work out, but the opportunity they're going after is so big that if they get it, this is the one that can do it because it's so massive. Everybody needs insurance, and they're probably going to need it for a long time.
I mean, I hear you. I'm a bit more skeptical about it, but I may be completely wrong, and I didn't look at it in detail. But while we're talking Lemonade and bitter drinks, you are also a big fan of Celsius, right, Christian? And you're still in that stock. Tell us a little bit about it.
So, to be honest, Jeff brought it to my attention. I didn't know much about Celsius, and there's some people on Twitter that talk about it. So I went to research about this company because their growth is unbelievable. When we talk about a growth company,
you still drink
I drink it. I drink Celsius. I'm an orange guy, so I drink one or two a day. I got to be careful because they make you a little crazy. Not that you would know, but
even more.
So,
Herbert,
but their growth is crazy. Like they're growing every time they come out with a new number. They're growing 130%. Then they're growing 150% units, and this thing is just a growth machine, right? I've never seen growth like this ever. Again, I'm sure it's out there.
But tell us about the drink. So is it good to drink?
It's really good. I like the drink. And I don't like a lot of energy drinks. But the difference on this one, and Jeff, tell me if I'm wrong, the Red Bulls of the world, Monster's a $60 billion market cap. Celsius is sitting here at 10 billion, right? They're trading, at a premium valuation, but they deserve it because the growth. The valuation can compress real quick because they're growing the earnings now. And Pepsi's in there, and they're going to go international. Only 4% of their sales are international. So Celsius is one of these companies that is no sugar in there. So all the energy is from caffeine, where the Red Bulls, I believe, and the Monsters have a lot of sugar in there. So that it's a little bit better, and it doesn't make me feel too bad. When I drink it, it just feels good. It feels like a nice, refreshing drink. So I don't know.
We're all looking at each other thinking, okay.
The growth to me is exciting. I don't know if Jeff wants to comment on it, but to me, I just can't ignore that growth. And over the next 5 years, I think Celsius could I don't know what it would be. Yeah.
It's a more natural energy drink. I mean,
do you drink it, Jeff?
Absolutely. I've been in this stock for over a year, almost 2 years.
Yeah, but the stock, but do you drink the drink?
Yeah, I do. And it's got every flavor pretty much. Whatever kind of flavor that you like, and it's better than a coffee, and you kind of take it on the go, but and kids like it. I don't think, if you look at, and I say kids, I mean teenagers, 20 somethings, they're really into this drink, and they make good margins, and their growth is I mean, it's literally up at around 100% growth in terms of the company. So I entered this in the 30s and 40s. Even last year it dipped down to, so it's had a couple of interesting dips, and now it's near all-time highs, and looks like they're gonna have another good quarter. So yeah, that's another one to keep an eye on, and maybe on a pullback, have another look at that. So yeah, they have a great product. This is around a great product, and then they had a huge investment from Pepsi last year to really help expand their distribution. They needed that help. And they got a big vote from Pepsi. Pepsi got in the $70 range, and now they've doubled up.
Wow.
Yeah.
Good
And
for
full
them.
disclosure, Jeff, I couldn't wait for too much of a pullback because the growth to me is just incredible. So in the mid 140s, I started buying it again because I'm just like, this thing is.
There you go.
I,
He
you know,
drinks one, he buys one. There you go.
I do coffee and the Celsius. I double it up, so I'm a mess.
There you go. Okie doke. So now we're moving on to the societal part. And when I was preparing this, I thought this is absolutely crazy because all we talk about is going to be Elon's companies, and most of it is good news or at least interesting news. So one thing I wanted to touch on is obviously the fact that they have now launched X.AI, which is not X Corp. So explaining that, whether there's really a threat by threads to Twitter. The Boring Company, whose Las Vegas loop has now expanded to the Wynn and the Encore. That's going to open beginning of January, but the tunnel has surfaced. And China has successfully launched the first methane liquid rocket. So that is, for once, news in the space industry where SpaceX is not the first or the most prominent in a very little niche. So just wanted to touch on those. So who of you wants to comment on that, Herbert? Do you want to start?
Yeah, sure. All right, so let's explain the X Corp. So Twitter is now X Corp, and probably will change the name from Twitter to the X app, which is Everything app. And then Elon just launched a brand new AI company called X.AI that just announced yesterday. And then, of course, in the last earnings call, he had said very clearly, or the investors day, no, I'm sorry, shareholder day, he had said very clearly, I'm staying because there's a really big opportunity to create AI and general AI, of which these three companies are going to have a big play. And Tesla will have a big support to helping X Corp and XAI. And so what are they doing and why they're doing it this way? So first of all, we know that Tesla, as we just reported, is creating real world AI. This is vision first AI. This is the ability to understand the world and then to move amongst the world with their robots. Number one robot is the car. Number two robot is Tesla bot, right? Using vision, the cameras, being able to learn and understand the world. And I'm talking learn and understand the world. Like this thing is teaching itself now. There's no more labeling required. There's no more of this vision required from the cars. Those are initial inputs. But now, just like ChatGPT with their large language model, can, by getting some input of some words, it can then predict what future words it should do. And it appears to you by putting questions in or saying, here's the beginning of a story, fill it out the rest, or some other apps out there that you can actually say, here's a part of the picture, fill out the rest of the picture, create me a picture. That's generative AI. What Tesla is able to is real world AI, right? The ability to actually understand and generate a world. We're talking, the driving, and it can predict what's going to happen in the future. So that is the ability to do real world AI, and then it's end to end. So now the car knows what to do. Will turn the steering wheel, press the brakes, and the robot will know what to do. And now they can do things like telling the bot to, pick up the apple, and it will do that. Or telling the car, I want you to take a right turn, and the car will do that. So that's what Tesla's doing. X.AI, what they're doing is going to do the generative AI, which is taking all of that and then combining and catching up to what ChatGPT is. And then they're going to just make it to be this basically the race is to be general AI, and then eventually it's going to be AGI, right? Some sort of the super intelligence. And so that's their goal, is to create that. And so he needed to create a small company that is just 100% the smartest, machine learning AI people in the world to come there. But they're all going to work closely together. So XAI, now Twitter is apparently, I did not realize this, is apparently an amazing resource. So it's very, very fortunate that Elon owns this, because apparently of all the images it has, all the videos it has, all the text it has, all that information can feed both XAI and also Tesla's driving information, because apparently now you can actually take video as well to inform that. So anyways, I think it's a really, really big deal. I think he's coming from behind, like he has said, but he's the one thing Elon's able to do is attract the best of the best. And by communicating the fact that we will have the largest supercomputer in the world by January, and it's going to be 100 exaflops, which is just unheard of. Like this is like, I think 20 times larger than the largest supercomputer in the world by the end of next year. Then you have all this data, you have all this proof, you've got the bot, then you got XAI. I think it's going to attract the best of the minds, and they have a good chance to catch up. So I'm very excited, and I'm happy that Tesla's doing this and Elon's doing this. I think it's going to benefit Tesla if you're a Tesla shareholder.
Beautifully presented. Thank you very much, Robert. I absolutely love that. Jeff, Christian, you want to add anything on the difference between X Corp and XAI? Jeff?
No, I wanted to actually get into threads
Please do.
and transition to that. I think Herbert did a really good job of actually going through the buildup there and what's the difference between the two. So I appreciate that. Yeah, I think the threads versus Twitter thing has been a really interesting start. It fits well in this society section because there's kind of this, again, there's been this labeling of, if you want kind of a happy, joyous place, go over the threads. It's like the Barbie movie, like you're looking, it's amazing. And Twitter is this, this war zone, and it's just not the case. Twitter, the world on Twitter is kind of what you create and what you make of it. And there's going to be, good and bad actors coming in and out, and you've got to figure out how to sort through that and figure out, where you want to engage versus not engage. And I get a little bit concerned, from on threads is like, I created an account, but like, what data am I seeing and how is it formulated? The Twitter algo, the For You algo in Twitter is actually open sourced. It's on GitHub. You can actually view it and understand how the decisions are being made. It's out there. Not everybody's going to go and do that, but at least it's available. But you actually don't know how the information is appearing on your feed, in the Threads app. So, it's interesting. It got off to this amazing start. If you've watched my Twitter feed, I do have this annoyance in terms of like how much money is involved and how these social media companies specifically, the company that owns Threads, they basically buy media. They buy gigantic portions of media. And so what you see on TV is like, look at this launch. It's amazing. But they've basically bought, they're the top advertiser or in the top 3 of major cable news and of fintech news. They've bought the most ads, and they're in the top 3 of almost all of them. And that's why you're seeing this again, you're seeing this great coverage. But if you actually look at the usage statistics, it was tweeted out today, and the Google searches, and for either Threads versus Twitter's been on this kind of steady run, and there's this huge spike when Threads came out, and it's basically now fallen well below Twitter in terms of Google searches. Because when you actually go in and you want to search content on Twitter, if you want to look for a photo, if you want to look up what someone said about something, you can actually get results. If you do a search on Threads right now, it just pulls up profiles. So I mean, yeah, it's early in their development. I think they're off to a good start. But how do I see my information? What information are they taking from me? Sometimes it's not clear. Some people have posted what they're actually taking and how they're using it. And then how is that timeline made for me? It's not clear, and it doesn't sit well. Doesn't sit well with me. So I think the functionality, I think the community that's on Twitter is the actual key. And I think what we talked about in the beginning of the show and what they're doing now with creators is just going to take that to another level.
What do you think about this great tweet that I saw regarding Threads versus Twitter? And the idea was that in a year, Threads will die. And the reason is because they made a fundamental mistake, right? So the reason why, obviously, it sounds great, right? 100 million signups in the first few days. It's only 7 days old at this point. But the problem is that all those signups are all Instagram users. Yeah. And they can't afford to lose eyeballs on Instagram, because that Instagram is such a big money maker. I don't even know the numbers. We're talking $100 billion. Like, this is ridiculous how much money they have. And so if Twitter dies and Threads takes off, they'll only make $6 or $10 million a year, whatever the number is. And it's like 5% of what they would make on Instagram. And so they really can't afford to lose the eyeballs of the Instagram users using Threads. If Threads was able to capture the Twitter users and non-Instagram users, that might be another thing. So this is kind of a fatal flaw in the design of what they're doing. And then, by the way, of course, I've signed up as well. And I went and spent 5 minutes scrolling through, and I couldn't find one thread that was interesting. There wasn't any threads at all. It was just like a post, a picture, a few words, and there wasn't anything of interest or anything of intelligence. And I thought maybe I'm not searching properly, because this can't be the 5 minutes of scrolling and I couldn't find one thing of interest that, oh, that's cool. TikTok is amazing. I'll spend everything on TikTok is gold stuff. I mean, I'm telling you, TikTok is amazing. I've been telling my children about this for 7 years, ever since I was like one of the early users. It's amazing. But Threads, nothing. So now I'm giving them a little chance, because it's only 7 days. We'll see it develop a community, figure out what it's up to. But what do you guys think about that concept of they can't? It's Instagram users, and so what are they going to do?
I completely agree. I think it's a real issue. I think it's a real issue. I don't think Instagram people want to talk.
Yeah. Let me jump in real quick, give me my little take.
Yeah.
I agree with the whole, but I'm going to take a different view of it. I'm not a Facebook user. I don't use it. I don't want to use it. I'm a Twitter. The main thing why I want Twitter is free speech. Now, the money side of it, put that aside a minute. I'll never go on Facebook because I can't express what I want to say. As long as I say what I want to say and I do it in a civil manner and it's not breaking any laws, and I want to get whether an opinion out there, whether it be political or not, I can do it. And I'm not worried about Twitter with Elon owning it, coming in there and, putting me in Twitter jail or doing whatever, or kicking me off the platform. I can feel confident that I'll be able to say what I wanted to say as long as I'm respectful, and I am respectful, that I can do that. Where I don't know that that's going to be the place over wherever at Threads. And the only other thing I'll say is Twitter, and I talked about it, Threads being this bubblegum thing. Like, I don't want bubblegum. Like, I want to get a little bit bruised. And I do get bruised sometimes on Twitter. And we'll go in there and we'll have a good debate and we'll give it back and forth. And, you see things that, I don't mind that kind of stuff. So it's not for everyone, but for me, the free speech angle that Elon set up, I don't know if it's good long-term for money. I think it will be with the creators. It's not going to matter. But as people keep going down the road and we go year after year after year, and people know, and what Elon said initially when he bought Twitter, for me, this is the main reason why I love Twitter, the free speech part of it. The fact that we can go on there, we can express ourselves, and we can say what we want to say, and we're going to be fine. I love that end of it, and I don't see that anywhere else. So that's why I'm Twitter, and I'll stay Twitter as long as Elon keeps that and upholds that.
Completely agree. Same for me. I was never an Instagram girl. I think I've got 6 posts up there, which date from Methuselah. And the funny thing is, I had my real name up there as an Instagram account, but obviously on Threads, I wanted to be Tesla Boomer Mama. But somebody had a fake Instagram account for Tesla Boomer Mama, because when they can't make a fake one on Twitter because we throw them out constantly, then they go to Instagram and realize that we're not there, so they're trying to fill the place there and sell their shit coins and whatever else. So the name was gone, and I thought that's already a bad start for Threads, because if I can't even have my name and they don't identify the spammers as spammers, and there's no reporting for it or whatsoever. So I set up the real Tesla Boomer Mama there, which is obviously ridiculous. Not the real Donald Trump. I'm not the real whatever, but there we go. And left like you, Herbert. Not even 5 minutes there. Just felt completely orphan and not in my space. So the whole meta universe is not mine. I'm making a lot of money professionally on Facebook just because my clients are on Facebook. So I'm a lot in immigration Facebook groups, but that's the only interaction I really have on any of the meta platforms. And I just don't think it's the same crowd. It's not the same free speech. I don't feel comfortable there. I feel my data is used and sucked away. Not that Twitter won't be used for language models. We discussed that, but I just feel much more comfortable about it there. So let's close that one. Go ahead. Yeah.
No, not close it, because I have a different opinion than you guys.
Go ahead.
As typical, seems to happen quite often. And so what I think is that So let me phrase it this way. I think what Christian was saying was that, I want to be on Twitter because it's free speech and both sides can be there. I don't want to be on Facebook or in Threads because it's bubblegum. It's one side and all that. Well, I don't think there is. It's really hard for a social media platform to try to stay in the middle. So if Elon's able to do this with Twitter and appease both the left and the right, have free speech, and yet both sides are able to maintain, that's a huge win, because that's not what has happened in the world. Excuse me. So if you look at all the news organizations out there used to be, really the neutral news journalist, respected, presents both sides equally. That's not the world anymore, right? It's completely left and right polarized. You have polarized right channels, you have polarized left channels. And so the more likely thing is that you're going to have a left Threads and a right Twitter. Initially, Twitter was seen as a left liberal area. And so what happened when that happened? All these other accounts formed, right? True Social and Mastodon, and said, well, we're not going to be at Twitter because they're so left. We're going to go into the far right. And they created new apps to do that. Well, now that Elon's here, the perception is Twitter has now become right wing. And so Threads has a place to say, we're not right wing, we're left wing. And so there is a potential for that to win. I just don't know how it's going to be that you're one app that's going to attract both sides. I'm sorry for my voice, guys.
But how sad is that, right? How sad is that finally we even have divided platforms, social media platforms by politics? I always thought it was a big mistake by Trump to set up the True Social Twitter clone, right? Which had obviously its existence, but I felt that Twitter was the place where people really talked things out. And yes, people tried to portray Elon as being right wing. I don't think he's right wing at all, but that's the image they give him. But if now suddenly you have a clone, because that's what it's going to be, Threads, just so half of the country can be in their echo chamber there and just talk to each other, the same way that Truth Social had the Trumpists and they just talked among them. I mean, how sad is that? What a bad sign for society.
I agree, and I think we should aspire to do what I'm talking about with Twitter, right? Like that we could all be on there, because in the past, now this is kind of old, but you're right, Herbert. In the recent, it's been go to your corner, I go to my corner, we don't. But back in the day, there was a conservative named William F. Buckley, and he would have liberals on, and it was a wonderful show, and people watched it. Crossfire, a more recent thing. You would have a conservative, and you would have a liberal, and that was loved. I loved watching that. So I think there is a place, if it's done right, that you can bring both together and you could have a civilized debate. So we'll see. You may be right, but I kind of agree with Alexandra. I would love to go in a world where we can both exist on the platform and we can kind of have these little back and forths. Yeah.
I do think Twitter's going to succeed. I absolutely think it's the right place. The world that we just described is going to happen. The community notes is fantastic. It is the thing that's going to solve this whole issue. So anyways, I'm very positive. I just didn't want you to say that the bubblegum Threads being the left wing is going to fail.
Yeah. No, that was just my personal that I won't do it. It might do fine. I'm just saying I'm not going to be there.
By the way, when the movies come out, have you heard this thing where people are going to watch Oppenheimer and Barbie at the same day? I might actually do that.
Now, I can't wait for Barbie. I'm waiting for, it's got one of my two favorite actors, Margot Robbie, and it's got, who's that other guy? I like him too. Now, that's going to be a good movie.
Christian, I'll be happy. Go drink a Celsius when he comes out of the movies.
Ryan Gosling. And then I'll watch Oppenheimer.
Yeah. He's a romantic at heart.
Mission Impossible tonight.
Exactly. So I just want to wrap this up and discuss the two other companies from Elon. So the Boring Company going ahead with the expansion of the Vegas loop, getting now to the Win and the Encore, which is going to be a big one. And I just want to big shout out to them. They also mailed out the the burned hair perfume. Oh no, Jeff is disappearing because Jeff was the only one of the four of us who got one, and now he's not going to tell us how bad it smells. Oh, I can't believe it. Well, anyway, so we're going to have to wait. How bad was it,
fetching
Jeff?
it.
Oh, you were fetching it. Show it to us.
Yeah. There it is.
Oh my
Ooh,
gosh. It's a
fancy.
cute bottle.
I just want to make sure I don't drop this.
Small.
I feel like it's a grenade. If I drop this, I'm not going to be able to use my office anymore.
Do you put 2 little spots on your neck when you go out, Jeff?
No, I was telling Alexander I'm gonna douse myself for the CyberTruck event, and I think
And
that
then-
there should be a call
And then I get
out to everyone.
a big hug.
Everybody
Jeff
gets a big
smelling
hug.
burnt hair.
I think everybody that ordered this should literally douse themselves for the CyberTruck event.
Not
Or the
sure I
next
want to come
Tesla
to the
event.
event anymore. There you
And,
go. Well, I'm
does
pleased
it-
you got
is it-
some.
We need to be unified.
How
it
much
same?
was that? How much was it, Jeff? How much was that?
$100,
I don't
right?
remember.
Retail.
Yeah, maybe
No, it was
100.
$100.
It's a collector's item.
It
Yeah,
is.
not
Is
one
it
of-
gonna go? Is it going
joke.
in the shelves behind you so that we can monitor?
It is.
its existence?
It'll blend back there. It'll probably keep
Oh my!
any
Good.
spiders away.
I think it's matching my lipstick, so I'm all happy about it. Herbert, you were going to
Yeah.
say something.
Well, no, that means Jeff. She wants you to give it to her. So go ahead and mail it.
No,
up.
no, 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 no! I don't want it. No,
Oh yeah,
I don't want
like I said,
I'm all good.
bring it to
No,
the
I was
next
just gonna ask
event.
him what
Make
it
sure
smells
it's
like.
in the
I
air.
mean, it's a joke, right? So it smells like burnt hair. Does it really smell that bad?
Yeah, it smells really bad.
it's
Apparently,
got a
pretty
mixture.
stinks.
Yeah, it's got a mixture of scents, like old cigarette smoke and things like that. So I don't know.
Risky.
I mean, maybe somebody likes it. Most people probably won't. But
He should have titled
I
it
think-
Musk. Musk. That's the name. Musk.
There you go.
Burnt
And you know
musk.
what?
There we go.
It should have had the smell of marijuana. I actually really like the smell of marijuana.
There you
It's so
go.
good. But
we're
Let me
learning a
grab
lot of
Musk.
things about
We're going
Herbert
off
on
the
this
rails now.
show.
We're going off the rails.
So wait, first we have the massive
gonna make the
TikTok
clips.
usage, right? We have the TikTok usage. We do this
Yeah.
pre-show prior to the show where we talk through things, and we got the
I don't know
camera.
about this
Herbert
guy
turns his
anymore. I
camera
might
on.
be, yeah, Herbert, you're sharing too
turns
much
his-
here.
Turns his camera on, and we see him doing TikTok dances, and now we know he likes the
No,
smell
I
of
don't.
marijuana.
That's not true. That's not true. But I'm telling you, I was one of the early users of TikTok, and I was telling my girls, this is going to be big. It's huge. I was so hooked on it already. Of course, it's not good for teenagers, all that kind of stuff. But I'm just saying, I'm an early product user, and I can spot things. It's not that hard to spot TikTok was going to be successful, but yeah, I love
What
to
else are
look.
you
for
well
things
done.
that
What
do
else?
succeed.
What else are you hooked on, Herbert?
Right now, Twitter. And now that I'm gonna get paid, I'm friggin' gonna get. I'm competitive
gonna
too,
see
Alexandra.
Herbert all
But you've just. Did you guys know that at one point Alexandra and Farzad and I were all at 7,000 users,
True.
followers on Twitter?
And did you see
And then
how
when she
fast
got-
that just flew off?
Well,
I
so
mean-
that's yeah. What then we were all at 18,000. Okay, and I thought I'd have a chance here. All of a sudden, out of nowhere, what were you at now? 70,000, Alexandra.
72.
and then
yes. I love them
Elon
all.
follows Farzad, so now he's at 110, whatever, and I'm still in my lonely 27 or 28,000. It's like,
Yep.
what the
That's
hell?
not bad.
tweet
That's
more.
not bad.
You're gonna
Not
tweet
bad.
more. You're gonna tweet more.
I'm gonna tweet more.
And you just have
I'm
to.
gonna-
You just have
Everybody,
to
go follow me because I'm in last place. So go catch me up. Go do me a solid.
go and subscribe to my Twitter. That's the first one to start off with. Now let's just quickly say SpaceX had
No,
another
follow
capital
me.
raise
That's more
today.
important. I'm just kidding. I'm just kidding.
So SpaceX had
China and
another
SpaceX?
capital raise today. I think they're now
Yeah.
valued at 150 billion, if I got it right. I just caught it at last second before we went in, and just wanted to add for once that somebody does have a little things happening other than SpaceX. So China, who is now number 2 in launches of the rockets, has a successful first launch of a methane liquid rocket. So just calling them out, which is good because SpaceX is dominating this market so well. So it's all good. But Elon's companies are just all having an extremely good week and month, right? It's a pleasure to see.
I'll give you a little. This is not negative, but it's kind of funny. Out of all Elon's companies, they're all new and they're all groundbreaking. Only one actually makes any money. That's I think.
What do you mean?
That wasn't funny. That just didn't land.
But I
That did
think
not
SpaceX is actually making
Yeah.
money, I think.
No, like profit.
Oh,
Okay,
yeah,
gotcha.
but
Let me go through the list. Yeah.
You can
Interesting.
skip
Well,
this
I mean-
part. I was trying to be funny.
You were. It's good. It was our 50th episode. Thank you very much to all of you having joined us. We were a little bit longer than we had planned to, but it was great fun. Big shout out to Xander who couldn't join us, and I'll see you all next week again. Thank you, gentlemen.
Yeah.
Thank you. Hey there, thank you for joining me. If you can, please consider supporting this channel so I can keep it going. It's a lot of work arranging all these amazing interviews. One of the easiest ways is just to click that join button and become a member of the channel. Thank you very much. Let's get brighter.